Hello everyone, it's your guy FX, and this video is simply a continuation of my previous videos that talked about beginner to advanced. So this video I'm just going to be explaining more on what is lot size, leverage, and equity margin, and etc. So guys, trust me when I say forex can be complicated if you don't understand the basics. So guys, do well to watch the previous video and also watch this and try as much as possible to understand. So without further ado, let's dive into the video.
So guys, what is lot in forex trading? It's very simple. Lot is simply the measure of volume. And so let me explain that. Let's say I buy gold. Now let's say I buy gold. We bought gold. Let's say Mr. A buys gold. Mr. A buys gold at the same time with Mr. B. At the same time with Mr. B. They both bought gold, right? And Mr. A makes $1,000, and Mr. B makes $100. They bought at the same time and exited at the same time. They took their profit at the same time. So now, why Mr. A made $1,000 and Mr. B made $100 is what we call the difference in lot size. That is the lot size. The lot size of Mr. A is bigger than that of Mr. B. I hope you understand. It's your buying capacity. You get, for example, a person who has 100,000 capital, and a person who has $1,000 as capital, their buying capacity are going to be different. So which means, so lots, I'm just explaining lots is your buying capacity. Do you understand? So now we have three types of lots. We have the micro, we have the mini lot size, and then we have the standard lot size. So the standard lot size is the biggest, that is 1.0. That is the standard lot. So the mini is 0.1 lot size, while the micro lot size is 0.01. Right. So this standard lot, which is the biggest, for every pips, I hope you guys remember what pips are. So now for every pips move, right, this moves in $10. So now let's say a price of an asset moves 1 pip. If you placed a 1 standard lot size, it's going to move in $10. So now for a 0.1, which is the mini, for every pip movement, pip movement is going to move in $1. While the micro lot size, for every pip movement, this one is moving in 0.10 cents. 10 cents. I hope you guys understand. So the standard lot is the biggest, followed by the mini lots, followed by the micro lot. We also have what we call nano lot, but I don't think you guys really need that. Nano lot is, some brokers offer nano lot, but it's very, very small, right? So now let's move deeper into what lots are. So now this, as you can see guys, example. So now we have, let's say we bought Euro USD with 1 lot size, 1 lot. Let's say we bought Euro USD with 1 lot. So now for you to buy Euro USD with 1 lot, you have to times your $100,000 with this price. $100,000 times the ask price, which is 1.1322, is going to give you right here $113,222. So now to buy a 0.1 lot, you need $11,322, and for you to buy a 0.01 lot, you need $1,132. I hope you guys understand. So now remember, like I said, you buy at your ask price, right? So for you to buy, you need to be filled up at your ask price, like I explained to you guys when I was talking about bid and ask price. So now Forex leverage. So now a lot of us don't have $100,000 to buy one lot or 1 mini lot or something like that. Imagine, just for you to buy a micro lot, you need $1,132 to buy at our ask price, which I just told you earlier. So now that is where leverage comes in. So leverage is a money your broker, I hope you still remember how brokers are, your broker gives to you. Just for example, let's say you want to do a business and then you don't have enough funds to even fit into the category of what that business needs. So now you went to a bank to borrow money, right? So that is where your broker comes in. That's one of the main reasons, the main problems brokers solved. A long time ago, retail traders couldn't participate in the forex market because of lack of funds, right? So the brokers came and solved this problem. So now leverage is the buying. So now let's say you have a deposit of $500 and then you had a leverage of 1:100. So guys, remember I said lots is simply the measure of volume or your buying capacity. So now forex leverage is your buying power, right? Your buying power. So now me and you, as a retail trader, as someone who's just coming up, as someone who just want to participate in the forex market, we don't have $100,000 or $10,000 to even place a 0.1 lot size, or to place the lot size we needed to participate in the forex market, right? So now this is where broker comes in. This is one of the major problems broker solved for us as a retail trader. This is one of the main problems they solved for us. A long time ago, we retail traders couldn't participate in the forex market because of lack of funds. Retail traders couldn't participate in the forex market because of lack of funds, but brokers came and they brought in what is called leverage. So now leverage is simply your buying power. So you just have $500 and you deposited $500 into your account, and then you chose a leverage of 1:100. 1:100 simply means 100 times 500, right? 100 times 500. So which means 100 times 500 is simply going to give you $50,000. So which means your buying power now has moved from $500 to $50,000. I hope you guys understand. Your broker is lending you this money to participate in the forex market, because of course with the explanation I just gave you on lot size, you cannot participate with $500. I hope you guys understand. So now they are making us participate by lending us a money which is called leverage, right? So guys, how does leverage now works on a real note? So now let's say you have an account balance of $1,000 and you chose a leverage of 1:100, which is going to give you the buying capacity of $100,000, right? And then you want to place a trade of 0.1 lot, right? You want to place a trade of 0.1 lot size, and that is going to be 11,322. So your broker is going to put down 99% of what you need to take the trade. The broker is going to put down 99% of what you need to place the trade, right? So which means, so the 99% now equals to $11,209, and then your own 1% is now going to be $113. So now guys, what is margin? So now this $113 right here is margin, your own 1%. Like I said, this is your leverage, the 99% they're giving you, and your own 1% is your margin. And mind you guys, whenever you place a trade, for example, you place a 0.1 lot trade, don't think they're gonna lose any money. The moment you exhaust this, now remember I said 0.1 lot size per pips is gonna move in $1, right? $1. 0.1 lot moves $1 each pip. So which means if you are down, maybe your prediction wasn't right and you're down 113 pips, that means you've lost these $113, right? So the moment you lose it, the moment you lose this money, they're gonna pull out their money back, right? And then you'll be left with, your balance is now gonna change to 113 minus $1,000. I think that $887, right? $887 right there. $887. Then you'll be left with $887. So if you keep losing, let's say you take another trade, you keep losing till you now lose all your money, or the whole, that's what we call account blown, right? That's when your account is now blown. That's what we call account blown. You no longer have any money to trade. So first of all, this is our margin, $113. This is our balance, and then this is our borrowed funds. This is our leverage right here, 11,209. So now we just play the trade, right? And then, like I said, our margin is our 1%, and then the 99% is what our broker is going to put down. So now our equity right here is our margin plus free margin, right? Our margin plus free margin. So now free margin is simply your balance minus your margin. And how to also get your equity, you have to plus your margin plus your free margin. So now if you minus your margin, our margin right here, which is 113 minus 1,000, is going to give us $887. That's just the free margin, the one we haven't touched yet, right? While our equity is our margin plus our free margin. So guys, like I said, whenever you take a trade and you had a loss or a win, this right here, they're going to pull out our money back, and then you're going to be left with the balance. So now here we lost minus $200, so which means we're going to be left with $800. Our balance is going to change to $800, right? Our balance is going to go from $1,000 to $800. So if it was a win also, our balance is going to change from $1,000 to $1,200, and our free margin right here is also going to change. It's also going to change to $1,200, right? This is what we call account blown, right? You just kept on losing, and there's no more free margin right here, right? There's no more free margin. So what the broker are going to do is they're going to pull out our money, and you're going to be left with this small amount of money, right? You're going to be left with this small amount of money, and they're going to bring out their money. And the main reason why you're being left with your margin, which is $113, is for them to protect their own funds, right? So nothing is going to affect their own fund. But sometimes, due to very high volatility in market, you might be left with $50. You get. So guys, this brings us to our next topic, which is stop loss and take profit. So guys, as a trader, this is one of the most important tools you're going to be using on your trading platform, right? So stop loss is simply an order you give your broker to take you out whenever price gets there, like whenever price goes against you. Now let's say you enter right here, you entered for a sell, that price is going to get here, but price didn't come, your prediction wasn't right, and then price was going against you. That means you are losing money. So stop loss is a place, an order that you give to your broker that whenever price gets to this place, please take me out. I don't want to lose more than when price get to this place. I hope you guys understand. And your take profit is simply a price where you give a price where you're going to tell your broker to bring you out in profit. Okay, my profit is enough, the profit I made today is enough, or the profit whenever price gets here, the profit I'm in whenever price gets here is enough for me, or this is what my strategy tells me to do, or anyhow, you get. So this is your take profit. It's just as the name implies, take profit, stop loss. It's very simple. Stopping your loss, taking your profit. Very simple. So I hope you guys understand. So now let's go to buy stop and sell stop. A buy stop is simply an order placed above price and price keeps going up. So now a buy stop is an order placed above price and price keeps going up. So now let's say this price, your prediction was that when price gets to this level, when price gets to this place, to this zone, the price is still going to keep on going up, and then you place a buy stop, and when price got there and then keep on going up, you're going to make profit. If this happens and you set a buy stop right here, you're going to make profit. You're going to be in profit, right? But let's say price got here, triggered your buy stop, and then start coming down, you're going to be in a loss, right? But let's say price doesn't get to the zone and it doesn't get triggered, and then price start coming back down, you won't be in a loss. It will because it didn't touch, you haven't even entered yet, right? Because your buy stop hasn't get triggered. So now for a sell stop is just the opposite of buy stop. A sell stop is an order placed below price and price keeps going down. So now when you got to your chart, price was currently here, and then your prediction was that your strategy was that when price get to the zone, price is still going to keep on going down, and then you placed a sell stop order, right? And then when price got there, it just kept on going down. You're going to be in profit. But if price comes here and gets it triggered and then keeps on going down, you're going to be up rather, you're going to be in loss. But if price doesn't get it triggered, if price doesn't get to the zone and then start coming back down, you won't be in a loss, right? You won't be in a loss. So now let's move on to buy limit and sell limit. So guys, buy limit is an order placed below price and price then goes up. So now let's say price is currently here, and then but you don't want to enter at that particular price, right? You want to enter at a lower price, and then so your strategy was that okay, price is still going to come back to this zone and then start going up back, right? So like I said, probably you won't be on the chart or something like that, and then you put a buy limit right here because you didn't want to enter at a higher price, you want to enter at a lower price. So you put a buy limit, you set a buy limit order right here. So when price gets here, it gets you triggered and then it goes up. That means you are in profit. Your prediction was right. So a sell limit is simply an order placed above price and then price then goes down, right? So now let's say you also the same example, you were right here when you got on the charts, but you don't want to sell right at this place, you want to sell at a higher price, right? So you just sell to your sell limits at the price which you would really want to enter. You sell your sell limits, and then when price get there, it gets triggered and then price start coming back down. But let's say price gets to this zone and then keeps going up, you're gonna be in sweet loss. You're gonna be in loss. You're gonna be in a loss. So that's pretty much it. And also for the buy limit, if price comes here, gets it triggered and doesn't go up but rather keeps on coming down, you're gonna be a loss. So that's pretty much it, guys. I hope you guys understand. Guys, we have three types of market analyst. Number one is the technical analyst, number two is the fundamental analyst, and number three is the sentimental analyst. So what is analysis? Analysis is simply the way we use to examine, when to buy or when to sell. The small research we make to know when to buy or when to sell a currency is called analysis. Do you understand? So now, technical analysts are analysts that purely uses the price on the chart to predict. Again, they use historical data that they've gotten through backtesting, through looking at what has happened in the left hand side, what has happened in the past to predict future, what is going to happen in the future, right? So these are technical analysts. They use indicators, they use trend lines, they use support and resistance. Fundamental analysts are analysts that uses economic news to predict if the price of an asset is going to increase in value or not. Again, they use political news. Maybe there's going to be an election or there's going to be a war. For example, let me use gold as an example because I trade gold. So now, whenever there's war, gold tends to move very high. Like it tends to increase in value massively. For example, the Russian and Ukrainian war, gold increased massively in value, and it's just because potential investors look gold as a safe asset to invest in. Again, because it's gold, so they look gold as a safe asset to invest in. So whenever there's war like that, the gold is something like that you're gonna invest in to like protect your wealth. So that's why gold moves very, very high, like it increases in value. So now, sentimental analyst. This analyst, like the name implies, is based on sentiment. It's based on others' opinion, what other people are thinking, what these central bank are thinking, what they are thinking, what they are thinking about whether to put in more money in their currency to balance. Like I said, the central banks are looking for control, right? So these are what they are looking for. They are looking for sentiment, opinions about other people. Just imagine you are in a WhatsApp group where they talk about whether Bitcoin is going to go up or come down. So the person looking at other people's opinion on the WhatsApp group is a sentimental analysis. He's just looking at other people's opinion to decide whether he's going to invest in the currency or not. So these are sentimental analysts. I hope you guys understand.
So guys, if you've made it this far, I want to congratulate you that you've moved from a beginner level to an intermediate level. So guys, if you want to proceed on your quest for knowledge regarding forex trading, you can kindly send me a DM on my WhatsApp link right in the profile tab to add you to our newly launched free Forex Academy. We are going to be dropping in content that's going to help you from beginner level to an advanced level. So guys, if you haven't subscribed to this channel, kindly do that right now, and also kindly like the video and probably share to others who might also be in need of this particular video. Your guy signing out.